Hey everyone, welcome back to Corporate Decoder. Today, Howmet Aerospace Incorporated HWM just filed their 8K report detailing the results of their shareholder meeting, and I'm seeing some interesting voting outcomes. Quick note, this is not financial advice, just my take on public filings for educational purposes. We'll break down exactly what happened at their annual meeting and what the vote counts reveal about shareholder sentiment. Alright, so this filing is all about what happened at Howmet Aerospace Incorporated's annual shareholder meeting held on May 1926. Think of it as a report card on how shareholders voted on important company matters. The company held its 2026 annual meeting of shareholders on May 19, 2026. At this meeting, shareholders voted on 3 key proposals. These were all laid out in their proxy statement, which is like the agenda and background information for the meeting. Shareholders needed to decide on who would be on the board of directors, whether to approve their accounting firm, and an advisory vote on how the company pays its executives. To give you some context on the voting power, as of the 24th of March 2026, there were over 400 million shares of common stock eligible to vote. Out of those, about 365 million shares were actually represented at the meeting, either by shareholders attending in person or by proxy, which means they gave someone else permission to vote their shares for them. This shows pretty good participation from shareholders. First up, let's talk about the directors. Shareholders had to elect 9 individuals to serve on the company's board of directors for a 1-year term. The good news for management is that all 9 nominees were elected. For example, James F. Albor received over 325 million votes in favour, with only about 16 million against. Similarly, all other nominees saw strong support. This indicates that the shareholders are comfortable with the current leadership team guiding the company. It's a clear win for the board nominees. Next, shareholders voted on whether to approve the appointment of PricewaterhouseCoopers LLP as the company's independent auditors for 2026. This is a pretty standard vote each year. Think of auditors as the scorekeepers checking if the company's financial numbers are accurate and fair. This proposal passed handily, with over 342 million votes in favour and just over 22 million against. This signals that shareholders trust the firm that is keeping Howmet Aerospace's books honest. Finally, we come to the say on pay vote, which is an advisory vote on executive compensation. This means shareholders get to voice their opinion on how much the top executives are paid. This proposal was also approved, though the vote was a bit closer than the others. The for votes were around 243 million. While the against votes were close to 100 million, there were also about 376,000 abstentions and over 22 million broker non-votes, which are shares held by brokers for clients who didn't give instructions on how to vote. While it passed, the significant number of against votes and broker non-votes, especially when compared to the director elections, might be something to keep an eye on. It suggests that while shareholders are okay with the overall direction, there is still a segment that finds the executive pay package a bit too generous or has some concerns about it. Looking at the broader picture for Howmet Aerospace Incorporated, the company is a major player in the aerospace and defense sector with a market cap of over $100 billion and around 25,000 employees. Recent news suggests a positive outlook with price target increases from analysts and announcements of stock awards for directors, indicating internal confidence. Additionally, the company recently approved a common stock dividend, which is typically a good sign for shareholders. However, the P/E ratio of almost 60 might indicate the stock is trading at a premium, meaning investors are expecting significant future growth. The shareholder votes especially on executive compensation, while ultimately in favour, do show a level of scrutiny that is healthy for any company. What I am watching is whether the company can continue to justify its high valuation through strong performance, especially given the dissenting votes on pay. The risk I am watching is continued shareholder pressure on executive compensation if performance doesn't align with pay. What I'm actually looking for is for the company to consistently deliver on growth that outpaces its premium valuation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and join our Discord community.